Hi guys, today I'm going to cover some of the most common questions when you start investing. In order to buy your first stock, you will need to answer those questions: how to choose an account to invest with, how can I buy my very first stock, and how do you earn money from a stock or an ETF. In the next few weeks I'll cover more questions. Feel free to add your questions in the comments below. I might cover them in my next videos. Surely I'll cover this question in the next videos. Why do stocks go up and down? If you are excited about getting to know the answer, hit the subscribe button. We have a lot to cover. Let's start right away. How to choose an account to invest with. There are several tools you can use to buy stocks and ETFs. The most obvious choice is your bank. It feels safer at the beginning to go down this route. I suggest you look into the price and fees to open and maintain a trading account with your bank, and the cost for each operation. If you are satisfied with the costs, that might be your best way to go. If your bank is charging you a yearly fee for the trading account, or the trading fees are over $15 or euros per order, you might prefer to find a better alternative. If you are based in the US, you can consider Robinhood. They don't charge any fee. Interactive Brokers is an alternative which has very low fees and more professional tools. Are you in Europe? I thought about you as well. DEGIRO has very low fees. I have some friends using it, and they are satisfied with it. If you live in Germany, I know people using Ing-DiBa, and that works well for them. You find the links to those options in the description of this video. It will help the channel if you use those links. How can I buy my very first stock? Enter your trading account, and you will find controls to place an order. This means that you are not directly buying the stock, you are actually placing a buy order in the market, and you will get the stock when your order will match with the order of a seller. When you place an order, you can place a market order or a limit order. Placing a market order, you buy at the current best market price. Placing a limit order, the order will execute at the price you specify. When would I use a market order, and when a limit order? Let's make an example. If you want to buy Tesla stocks today, and you are happy with the current price, you can place a market order. If you believe in the long-term value of the stock, but you expect this quarter to have poor sales for Tesla, and you expect the share to drop, then you can place a limit order, with the value you believe the stock will hit. This way, your order will stay dormant in the market, till the time the stock hits the value you specified. Sell orders work in a similar way. How do you earn money from a stock or an ETF? There are two ways: by the increase of value of your share, or by dividends. When your shares increase in value, you can decide to realize your gain by selling them. For instance, I bought some share of Slack in June for €29.10 per share, and today I can sell them for €35.40 per share. The shares increased so quickly because Salesforce made an offer to buy Slack. If I sell the stock today, I'll make €6.30 per share, which is an impressive 21.6%. The other way is via dividends. Dividends are the profits which the company decides to distribute to the shareholders. If you own a share of a company, you are a shareholder of that company. Whenever the companies you own through share distribute a dividend, you will receive the dividend in cash on your bank account. You can find the dividends a company distributes with a simple Google search. There are a lot of tools out there providing this information. I personally use Yahoo Finance. An example of stock which provided dividends consistently is Coca-Cola. In the last 10 years they offered more than 2.5% per year in dividends. Since 2014, most of the years their dividend has been over 3%. Usually companies distribute dividends every 3 months, but when we speak of their dividends, you calculate the percentage on a yearly basis. Bonus question: is a low dividend a bad sign? The answer is no. Companies that have a big growth potential tend to reinvest all their profits to capture as many opportunities and market share as possible. For instance, Alphabet, the holding company of Google, currently does not offer a dividend. Slack is another great example of a company which does not offer a dividend. As an investor, you can think about it this way. With those companies, you are better off by having them reinvesting every penny into further growth, which will increase the value of the stock. Now you know how to choose an account to invest with, how to buy your very first stock, and how to earn money from a stock or an ETF. If you enjoyed this video, hit the like button and subscribe to the channel to get investment tips every single week. If you have questions, put them in the comments below. I'll see you next week.